anytime we have a trade that has fired off, one of the most difficult things is to understand how to manage a winner. And I think it's one of those things where these are fantastic, high-class problems, right? Oh, I have a winner, how do I manage it now? How do I manage this great trade that we've taken? And the Dow, today the Dow is our runner, right? Today the Dow, it's the Dow's turn. And so with the way in which we've been managing this short, and that short took place right up in here, so this was a definite reversion short after the clearing range. And there are two proactive targets. So one of the first questions I get is, Rag, when will you transition to a trailing? It's typically going to be after two targets, two proactive targets are hit. And I call these finish line targets, almost like a runner running across the finish line. They're proactive, they're waiting. We had a 26,005 level that we were looking at. That was one of the targets. What else do we have? We had our initial target at 26,105. That was really, really close. I mean, am I looking at this trade from 26,143 to 105 as the end-all be-all? No. One of the mistakes traders make again and again is they put their first target way too far away. They get way too ambitious with the first target. And the error in that is the delay that causes, in one, realizing a profit, and two, moving to a break-even stop. Because once you move to break-even, you've, one, paid yourself, and now the market can't take your money. All you're risking is unrealized profit. So when people say, well, Rag, how do you have the confidence to trail the way you do? Or how do you have the confidence to let it run the way you do? Because after that first profit target, gang, it's gravy. It's just all gravy. Worst comes to worst, I take a small hit at a break-even stop, which is usually just beyond my entry, right? So it is not purely an exact arithmetic break-even. It's a little bit of extra risk because whatever my entry was, in this case, I'll be just above it. But at this point, I've really limited my risk. I've paid myself, so I put some money in my account. And then no matter how this trade ends, it's going to be a winner for me today. The confidence you get just from knowing that no matter how this trade ends, it's going to be a winner, allows you to kind of exhale and let the market do its thing. So then you hit the second profit target. You hit that 26,005. And I do that all over again. I could leave the break-even stop in place, or I even have the choice to trail to the previous target. So 26,105 would be a fine, if I want to be aggressive on the second target, 26,105 would be a great trailing stop if I want to trail at that point. At the second profit target, you can stick with the break even or you could go to the trailing. You choose your own adventure. It's really up to you. There's no right or wrong here, gang. It's really up to you and how much of the unrealized profit you want to protect. Okay? So we hit the second profit target. You can have a proactive third profit target, but if we have taken out that initial balance low, I will also think about an end of day, which is exactly the alert we sent out to members shortly after, 11 o'clock or whenever we were done this morning with the morning day trading session. Again, choose your own adventure, but realize after that first profit target, the confidence that you have should be very high, because if nothing else, today you paid yourself. If nothing else, today is going to be a positive P&L day. That puts you in immediate rare air amongst trading kind. Got it? So the confidence isn't so much that I'm confident the market's going to keep going. Again, every day I wake up going, I don't know what's going to happen today. But here's what I do know once I've moved to a break-even stop. I do know that the market can't take my money. And I do know that the day is going to end with the market's money in my account. And that's what I mean by confidence. So if you can manage a trade like that, this is now 2 days in a row. We picked a trade. It came back to us. In other words, it was our pitch. In this case, it bounced up to the lower end of our short zone. It was the only one of the four that did on a fairly wishy-washy morning. took that short, and as it met criteria after criteria after criteria, we were paying ourselves, and in that, very subtly, increasing confidence and reducing risk. And it's amazing how those tend to move with each other. And that is the way you take, not just focusing on the entry here again, but everything that happens after the entry. Same thing that we did in the Russell yesterday, we're doing in the Dow today.